So much time wasted, so many accounts blown, so much frustration. If that is your experience as a day trader, I really want you to tune in to what I'm going to show you in this video. I've talked about this a few times. This video is really focused on risk management and using strategies that'll help you pass your prop trading challenges. It doesn't matter what firm you're using, right? If you're using Apex like me, if you're not using Apex, go ahead and use that link below. You could be using Top Step, you could be using Elite Trader Funding, you could be using any of the firms out there, guys. This strategy is going to guarantee that you have a much better chance of passing if you have winning trading strategies. For those of you that are new here, my name is Forrest. I invest in stuff. I'm a day trader, and in this video, I'm going to show you how to pass your next prop firm challenge. But first, I need to remove my cat because somehow he snuck into my studio and is slinking on over to me. What are you doing, buddy? Let's show the people my cat. Hold up. It's a big old chunk. Alright, enough cat. Look at him. He's just a ball of fur. Also, got to do my Discord commercial. If you want to see us trade live every single day, join us in the Discord. The link is down in the description. It is the wap.com/tradeedge link. I also have free trading journals there. Journaling is critical to becoming a successful day trader. So if you're not doing it and you're wondering why you can't pass, that's another major component. We're not going to talk about that in this video, but it's free, guys. Go ahead and check it out. We also have a 1-month free trial of our Discord. We extended it from 7 days to 1 month. That is 3 extra weeks free, guys. You have no reason at this point not to check us out. Again, we literally just day trade live. We give our call outs for the trades that we're in. We teach you how to trade, which is much more important. So when you hop in, you shouldn't just be jumping in the trades with us. You can, but you're not going to understand why we're trading the way that we trade. Join us. We'll talk to you about our trading strategies, why we're making the decisions that we're making, and help you along on your way to becoming a successful trader yourself. So what we're going to do next is open up some charts. Oh my goodness. My TradingView subscription ended. So now I need to do that right now live while I'm filming this video, which is pretty annoying. Never make it easy, guys. Don't think I need all of this. I need NASDAQ futures, and that should be all I need. So expensive. All right, spent $800. Wanted to film a video, spent $800 instead on TradingView. Cool. Got to do it though. It's worthwhile investment. So what is the strategy that I'm talking about, guys? It's called trading with low leverage. And I know that sounds crazy. Trading is always a game of math. And I think I can open up a scratch pad for this by doing, actually, I can't remember how to do it in this silly app, but it's a simple game of math. So you have a chart. Let's just look at ES on the 15-minute chart. So we have ES. This is a futures contract on the 15-minute chart. I execute personally on the 15-minute chart. It's my favorite time frame. Trading is always a game of risk management and nominal returns. What's nominal returns? I'm not just throwing out made-up terminology out there. Nominal returns is real dollars. People often talk in ROA. Oh, I made 100% on this trade. I made 1,000% on this trade. It's like, well, how much money did you make? Oh, well, I made $36. That's cool, but the nominal value is what brings up our emotions. If I turn 5 cents into $1, that's cool on paper, but if I would have put, $20,000 into that same trade, would I have held it as long? No, I wouldn't have, because of the real value of that money. That's the nominal value. So trading is always a game of managing your risk, managing metrics like return on investment or ROI, as well as making actual meaningful amounts of money. So an example to this, maybe you started trading because you want to offset your mortgage. Your mortgage is $1,700 a month. You might not actually care if your RR on trades is 1 to 2, 1 to 3, 1 to 5. You just want to make, enough to cover that mortgage every month. And that's it. And people can argue and bicker and talk about, and people can say, oh, well, I got 1,000% on this trade. It's like, yeah, dude, you made $36. I made $1,700 or whatever it is. Why do I say that? Because it's super duper important. It gets lost in kind of like the banter online. I think a lot of times why people actually do this. Not everybody wants to make a gajillion dollars from trading. I think you can make a lot of money from trading, which is fine. But I understand in actual conversations with people who reach out to me, like, hey, they're trying to offset their income in some way, which is fine. But that nominal value is what brings up the emotion. That nominal value of the money is also what causes you to fail and blow up. It's what causes you to go into high lever. It's what causes you to say, I want to go long here. You say, I want to go long here, but you need to have a stop down here. And we see that from here to here is about, let's see what it is, 7 points. 7 points. And let's say that you go long with 2 ES. So 2 contracts, you go long, 2 ES contracts. Going long with 2 ES contracts, if this is your entry and this is your stop, that's $100 a point. Now, the upside on this this theoretical trade is 39 points. 39 times 100, it's a good amount of money. That's 3.9K. Upside is 3.9K. Downside is $700. Now, in retrospect, even though we can see that the upside is much better than the downside here, if you went long here and put your stop below the lows, a lot of you guys would sweat over $700. A lot of you guys mentally can't even think about this because you're so focused on the 700, those 700 real dollars. So instead of going long 2 ES contracts, what I would recommend is maybe go long 5 MES. So let's switch this up. Get rid of all of this. If you go long 5 MES, that means it's $25 a point. One MES contract is worth $5. What's 5 times 5? It's 25. So what's 25 times 7, right? We can use the handy dandy calculator. 25 times 7, it's $175. So your downside risk here, downside risk is $175. What is the upside on this? I think I said it was 39 points. So let's do 25 times 39 is $975. Upside is $975. So obviously the upside is smaller because you're trading smaller risk, but you have to ask yourself, and this is the philosophical question that so many of you guys are going to spend 1,000 hours figuring out the hard way. You can watch this video and trust me and figure it out the short way. Either like it's going to get beaten into you through the market through consecutive losses, and we deal with people who deal with losses consistently all the time. It's either going to get beat into you or you're going to just listen to this and just let it seep into the depths of your soul. If you sweat over $700 a downside, then you need to accept and be joyous about $975 of upside. Because what you're basically saying is you can go high lever. When you go high lever, the 2 ES in hope of the 3.9K, that sounds great, but then you sweat over the same amount of points on the downside. $700 makes you freak out and you get out the trade. You're not able to hold it for the possible upside. You end up cutting it when you're only down 3 points. You're down $300 because you don't want to lose 700, which is what a lot of people do. They end up cutting the trade like right in here. They go, oh crap, before it even gets to their stop, they move their stop, they freak out, or say it goes a little bit past their initial stop. The trade still looks good and maybe it goes to 8 points. Whatever it is, you freak out. If that's you, then you need to trade smaller, because what that means is that you recognize that $700 is a lot of money for you. And $700 is a lot of money for everyone, honestly. The real value is $700. $700 will make anybody stay. You give $700 to a millionaire and it's a good chunk of money. You should be happy with $975 of upside. So trade the 5 MES. And what's awesome about this is now you're only risking $175. $175 is significantly less, obviously, $700 of downside. But what this is going to allow you to do is you've significantly reduced the risk to your capital stack. So what I didn't talk about in this situation so far is imagine that you have total capital of $1,000. We'll make it a little bit higher. Total capital of $3,000. Okay. Scenario A, you have a $700 stop. A, $700 stop. And in B, you had a $175 stop. Okay. Very, very, very simple math, guys. Do you want to risk nearly a third of your capital in scenario A, or do you want to risk a much smaller amount? I can give you the hard figures on this. 700 divided by 3,000 is you're risking 23% of your, and I could just do times 100. Times 100 gives me 23%. Or if we want to see the other one, 175 divided by 3,000, you're risking 5.8%. I'll do times 100 just so you can actually see the math. 5.83%. 23% versus 5.83%. The math goes on and on and on. Hopefully at this point you can see the gist of it, but well, I'll continue it for you, right? So you're risking 23% and you're risking 5% in the second scenario. So we got a bunch of theoretical math all off of one trade, an example here. Now let's imagine that you have trades like this every single day, which you won't. You lose this trade. So if you've risked 23% of your capital stack, if we do some quick math, if we round this up to 25, we'll be generous. Let's just say it's close to 25. Actually, we'll round down. We'll round down to be generous. Let's say it's 20%. You're not risking 23. Let's say you're risking 20%. That means you can lose 5 trades in a row. 100 divided by 20 is 5. 100 divided by 5 is 20. So that means you could lose 20 of these trades in a row trading 5 MES, and you can only lose 5 in a row trading 2 ES. That is the difference, guys. Let's imagine the upside. I talked a lot about downside risk. Let's imagine the upside on this. Let's say that you're on a hot streak. Let's say that you win the next 4 trades in a row. In scenario A, you're going to make thousands upon thousands of dollars. We're going to ignore scenario A. You're essentially making 3.9K. Let's say you do it 3 times in a row. What's 3.9K times 3? 3,900 times 3 is 11.7K. And in the second scenario, you're making 975 times 3. You're making $3,000. So you're making, write it down so everything's down, making making 11 plus K in scenario A, and in scenario B, you're making 3K. Now, again, you can't think about the A because you're not willing to lose those $700. It all comes back to that $700 in the first scenario A. This is so far away from you. You have to remember that this is, you're on a hot streak. You catch 3 of these in a row, you make 3K. You've doubled your initial capital, guys. You started with $3,000. You go on a hot streak with small risk, you've doubled your money. And that's what's so powerful about this, guys, that people don't realize. You're so focused on these big numbers that you can't think about risk management and actually approaching trading like a poker game and like cultivating your capital stack. If I could draw a graph of what your money would look like trading small, if you're making $975 a day and you start to scale that up appropriately, maybe you go from 5 MES to 6 MES to 7 MES, it's going to start to look like this. What's going to happen though when you're trading this large capital is going to look like this. Boom, 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 boom. And that's assuming you don't blow the account up. Once you run out of money, you can't trade at all. And that's what I'm trying to represent here. So all of this theorizing about what the perfect risk size is or anything, I'm telling you, whenever you size down on risk, go even smaller. Go even smaller. Because what's going to happen is it's going to allow you to hold these trades, really catch these bigger trades, test out your hypotheses as a trader, which is the most important thing. Would you rather be able to ride this trade out and see how close you can get to your actual entries, stops, and take profit target, and be able to do that for every single trade, actually sit in the trade the entire time so you can get accurate metrics of your hypotheses? Or would you be in a trade, you're freaking out the entire time, get out early because you're scared, and then it goes exactly to your price target? And you have to ask yourself, how many times has that happened, right? How many times has the trade went exactly to your price target after you got shook out? And the funny thing about that is you're so focused, you're like, dang, I should have held. Well, you should have traded smaller, because if you traded smaller, you would have held. So instead you lost money instead of making some money. You wouldn't make as much as, you mentally hoped you would, but it doesn't matter because you got stopped out. It doesn't matter. It literally doesn't matter how much money you could have, should have, would have made if you don't stay in the trade. And you need to get that, beat that into your soul. All of us could trade. I have a large enough account, in my own personal account. I could trade very large size into any trade. But again, we have to think about the nominal value of the money, guys. The nominal value. It doesn't matter that I could trade 30 ES and make a gajillion dollars, because I couldn't. I literally emotionally wouldn't be able to sit in that trade as soon as it went against me. As soon as it went against me, I'd freak out. And all this upside becomes unreal. It's very much impossible upside, because all I can think about once I get in here, all I can think about is losing, is not losing, trying not to lose. And when you're focused on not losing, this is just a life thing. When you're focused on not losing, you're not thinking about winning. If you want to win, you got to think about winning. You got to strategize about winning. You got to think about different approaches to winning, right? You got to think about how you can win more. You have to think about how to not lose, but most of your brain effort has to be focused on winning. And what happens when you trade larger is you start to think about how to not lose, or not losing, or losing less. Losing less, once you get into I want to lose less set as a trader, that's where people start to, you start to have consecutive losses of like, well, I actually feel like I'm going to lose this trade, but I'm going to get in anyways just to see if I'm wrong. How many times have you been in that mindset, right? You have a really bad day, you have consecutive losses, and you start to think that you're going to lose money. You don't even care anymore because you've lost so much money. That's a terrible place to be as a trader, guys. Do not spend 1,000 hours trying to figure this out. Trade smaller risk. I'm telling you, especially if you're a prop trader, which is what this is geared towards. If you're a prop trader making $975 a day, imagine making $975 a day, risking, only 25 a point. Okay. You can go even smaller than this. You're going to pass. You're going to pass. And what's cool is if you're using, a 50K, that's kind of my example account size for every one of these videos, but it honestly doesn't matter, but we'll use the 50K. If you use a 50K account from Apex with $2,500 of trailing, we'll just use the same trade. That means that you can risk 2,500 divided by 25, 100 trades, 100 trades, guys, 100 trades, assuming you only lose. Okay. I cannot stress this enough. Only lose. You have 100 at bats. Most of you aren't getting 100 trades in before you fail. And you know that. You're getting like 6 or 7. Why? Because you're going 4 ES, 5 ES. You're trying to pass on one trade and you blow it up. So all of that coulda, shoulda, woulda about what you thought was going to happen, or you might get lucky, never happens, because you're not good enough to trade that high leverage. Let's just be honest about it. You're not good enough. And what you need to do, be able to sit in a bunch of trades, test your hypotheses, build data, take notes. I like to use Notion. The free journals that I have, by the way, are in Notion. I use that for everything. I write down my trades. I write down what I thought about the day. You don't have to go crazy with this. I used to be super crazy with it. I'm far less crazy with it now. I just write down how I felt about the day. What were the big trades? What were the big trades that I got in? What were the big trades that I missed? What were the obvious mistakes that I made? It's like, I overtraded because I saw this at 12 and I was on a hot streak and I wanted more. I literally got greedy. I should have stopped. So I chopped myself up for the 3 trades after having a big, 60-point win. That'll be my entire journal. It's not like paragraphs. It's just like, had a good morning, chopped it up, turned it off. Boom. Should have saw this trade. Didn't get that one, but I got this one. Boom. But you need to do that, because what happens is you'll go back and be like, last Tuesday see that I caught an obvious long off of a naked POC bounce. I don't have the session volume profile on, but we start to add in some of this other data. There's going to be these nice winning trades that you'll get that you're not going to be able to look back on because you're not going to have. We can actually see this bottom wick is digging into yesterday's VAL here, this value area low. Take this long, like, oh, that's a nice long. But if a week from now, you're not going to remember why you made $975 on this day or lost money. So you have to journal, be smart about it. But when you journal, your winning trades will turn into your playbook. It'll become obvious what are the things that should be in your playbook. The overnight high sweeps, overnight low sweeps, something that we talk about. And when you just play your A trades over and over again with an acceptable risk size, like 5 MES or less, you could do 2 MES. There was a period, guys, where I had a really annoying few days. I went down to 2 MES. It's $10 a point, but I made money. If I'm making more money than you with 2 MES, even though it's not a crazy amount of money, that's a winning strategy. So be smart, be patient with yourself. If you're losing money, you don't get to say, well, I want to do it like this, or well, which is like the attitude that I run into with a lot of people with losing strategies, right? They complain, they whine, they fight, and it's like, you're a loser. You are using losing strategies, and you need to look yourself in the mirror, accept what you're doing, accept that who you are, not just what you're doing isn't working, who you are isn't working. And when you change who you are, right? When you become somebody else and do the things that that person will do, you'll start to win. That's the only way it's going to work, right? You start with changing who you are. Who you are defines what you do, defines what you think defines what you do, and then what you do defines what you get out of life, guys. I went a little bit deep there, but that's the truth. Wow, this video went way longer than I thought it was going to be. That's it. I hope you found this helpful, super critical, important stuff, guys. This mindset stuff is really what trading comes down to. We can show you the mechanics. There's books about setups and stuff like this. Being able to discipline yourself is key in mastering the market. Again, we trade live every day in the Discord. Check it out. My partner in crime in the Discord, Soul, is there. Shout out to W Dog as well. You'll see him. He's another one of the admins in the group. And we have other traders in there who are just awesome as well. Definitely pop in. We have this month, all month this month. If you sign up this month, you'll get 30 days free. So you can decide for yourself if you want to pay for the premium Discord after that. Totally worth it in my opinion. If you listen to us, like many have, we have profitable traders in there who honestly, like, they'd help us stay accountable. We keep them accountable. They contribute, but it'll more than pay for itself. And that's the goal. My goal isn't to make a bunch of passive income from YouTube and stuff. It's to help more people become good traders so that you guys can show me good trades and we can talk about it, and together we can have a bigger kind of view of the market. That's my ultimate goal, is like to just know as many awesome traders as possible so that we can have as many like A++ at bats as possible, because that's how you make serious bread. Anyways, I digress. See you in the next video. Deuces.